Hey guys, I'm going to try to construct the financial statements based on the balances in the general ledger. This is kind of the middle of the process for posting the journal entries. Before you can make the financial statements, you first have to post all the entries to the general ledger, and then you have to post the adjusting entries. So assuming you did all that correctly, you'll have something, a general ledger that looks kind of like the one over here on the right. And you'll have the outline of the financials here. First thing to do is make an income statement. You got your heading here, title of the company, name of the statement, and then notice this is for the year ended 12/31/17. The income statement and the statement of retained earnings are for the entire year. That's why they say for the year ended 12/31/17. Now contrast that with the balance sheet. The balance sheet is for a specific date. The balance sheet, as you know, is a snapshot, so it does not occur for the year ended. It's just for a specific date. Now, in our case, we happen to be preparing the balance sheet at the same time as the income statement and statement of retained earnings, so they have the same date. But that's not always the case, and that's why you won't put for the year ended on the balance sheet. So just a little reminder there. Now, first thing to do to make the income statement is you need to get your revenues. And the only source of revenues we have is sales. So go over here to sales balance, 200,000. Okay. And from sales, you minus cost of goods sold or cost of sales. And it's down there. Balance 100,000. Okay. That'll give you a gross margin. And that's 100,000. From the gross margin, you have to minus your expenses. Okay. And we'll just list those. We got wages expense, and that balance is 50,000. And moving on over, we have rent expense, 16,000. And then supplies expense, 800. And then we'll just put our total. It's 66. Okay. And the total of those give you the net income. And we have a net income of 33,200. It's a pretty simple income statement, but really we're not concerned with making the income statement. We want to show how that links to the statement of retained earnings. So we take that 33,200, keep that in mind. And to prepare the statement of retained earnings, we start with a beginning retained earnings. And we'll just put the date January 1. And we didn't have a beginning because this is a brand new company, so we'll put 0 there. And then we add net income. Net income, when it stays in the company, it becomes retained earnings. So by putting it on the retained earnings worksheet, it's becoming retained earnings. Now the other thing you could do with it you've got earnings, you could pay a dividend. So we would less a dividend, and we didn't have one in this case, so that's 0. So our retained earnings are 33,200. Okay, so now that we have the retained earnings, we can make the balance sheet. So the first thing that goes on the balance sheet are the assets, and we're going to list those in order of liquidity. So we'll scroll over here to the general ledger. First things first, cash. And we have that listed at balance of 106,500. Next one up, accounts receivable. $60,000. Next up, merchandise inventory. And that's got a balance of 25,000. Now, prepaid rent. That's 4,000. Now, I'll just draw your attention to this prepaid rent in the general ledger. Notice it has this beginning balance here of 20,000, and then I've already done the adjusting entry for the 16,000 that we used, and that's why it has a balance of 4,000. So if you haven't done your adjusting entries, you'll put that 20,000 and it won't be correct. So in order to advance to these financials, you have to have already done the adjusting entries here, and same thing with supplies. So go ahead and put that there. Supplies 200. That'll give us total assets. There we go, 195,700. Okay, now we need to list our liabilities and shareholders' equity. Okay, so first thing, liabilities. I'll just pull it out of here, the general ledger. Accounts payable. And that's a balance of $62,500. Okay, we don't have any more liabilities. We got common stock, that's an equity. People have a claim to our assets of $100,000. Okay. And then we have retained earnings. Okay. And we pull the retained earnings from the statement of retained earnings. Okay. Total that. And there we go. We have a balance that matches. Our assets equal our liabilities and equity, so we're in balance. That pretty much guarantees that we've calculated the retained earnings correctly, and the income statement should be correct as well. So I'm just going to minimize this, and I'll show you the instructor's solution, so that way we can compare and make sure everything's correct. And I'll just unhide the previous solution that I've done earlier, income statement here, and I've got the title and the I've got those switched, but no worries. Revenues here, sales good, cost of goods sold good, gross margin good. All these numbers look correct. And we have the statement of retained earnings. It's pretty simple, only 4 lines, and 2 of them are blank. So we just pull down the net income and turn it into retained earnings. And then finally the balance sheet. We pull all the assets off the general ledger, total those up. We get $195,700, and then take all the liabilities and equity and add in that retained earnings number that we had from the previous statement. And that gives us an in balance total of $195,700. So I hope this helps. It's a pretty simple process. You do have to keep track of your net income in order to get your retained earnings, and that will therefore give you your balance sheet at the end. So I hope this helps, and good luck with your test.